critical issues to come out of this AGM? Because I know that previously there have been many other sessions that are being held around how to really try to support export finance and credit for producers in Africa.
Yes, I mean, that's the critical aim of ATI. I mean, I was invited back as its founding chief executive for the 10th anniversary celebrations in the AGM. And the point really is still the same as it was some 10 years ago. The agency's made a lot of progress in ensuring, facilitating around $2.5 billion worth of exports, which without the insurance that it gave and support to that from the private insurance market would not have been able to go through.
All right, let's talk about the viability of setting up insurance products and credit facilities in Africa, where, I mean, a lot of business is done by SMEs working through the network of regional organizations, but effectively having to foot the bill themselves.
Well, I think the point about ATI is it's a somewhat unusual scenario, because what ATI is effectively a self-insurance mechanism. The World Bank supports ATI and provides ATI with IDA, International Development Association loans, which are given to the member countries. Those funds are held in trust accounts in London by the agency and are used as capital to underpin the underwriting. So in the event of a loss, the agency is actually using the money of the country that's caused the loss to pay the claim, which makes the country effectively responsible for its own losses and its own good governance.
So effectively, it's a macro insurer. How do you then see issues around debt in Africa? I mean, in Europe, they're grappling with sovereign debt, and this has had real bearing on the recovery process there. How do you view Africa? We're growing phenomenally, but we're growing at a cost to fiscal management. So many governments in deficit.
Yes, that's absolutely true. The converse, though, seems to be true in Africa. In the last few years, government debt is down by 28% to 59% of GDP across Africa, and that actually puts it in line with Europe. Budget balances have also reduced by 60% to a deficit of around minus 1.8% of GDP for Africa as a whole. So, in fact, and inflation also has come down from 22% in the 1990s to around 8% in the last decade. So Africa's story is not such a bad story, and of course you've got debt in Europe coming up. So I think this helps to support, and ATI will continue to help support this drive to create a better economic environment for which people can invest and trade into Africa.
If you had to provide a risk profile for Africa today, what would you say? Increasingly, it seems as though investors are less focused on political risk and more concerned about things such as the lack of skills that labor has, and also the deficit in infrastructure as being fundamental issues that impede on their investments.
Yes, I mean, I think the workforce is an interesting one. I mean, Africa has a workforce of over 500 million, and with that it's already 15% larger than that of Europe. Some of the labour in Africa is very skilled. I think the potential for Africa to provide labour force is very strong and seems to be growing.
Okay, and talking to us about the infrastructure deficit?
Yes, I mean, from an infrastructural point of view, of course, there's a huge demand, and some of that is going to be met over a longer period. And that clearly is a perspective of risk on Africa's ability to pay for large infrastructural projects. There is still clearly support needed from Western governments and from also the Bretton Woods institutions to assist in the development of those areas. I mean, you know, one asks the question, Africa has plenty of land. It has actually plenty of resources. Why do microchip manufacturers not set up in Africa? And actually, to counter your point, I think that's as much to do with political risk as it is to do with credit risk.
I mean, what we're seeing now is consolidation at a regional level by way of regional economic blocks trying to share out the risks and the cost of a lot of this infrastructure spend and try to get a free mobility of labor and that sort of thing. How would you operate within a context of greater regional integration? East African community is a wonderful example of 5 countries working well together.
It is, and there are a few others. You've got a number of these regional integration bodies. The biggest of which have around 20 member countries. If you take COMESA, also SADC, ECAS, which perhaps is not as active, ECOWAS, and also CENSAD. And I think there's a real case, and I don't think the argument is much different from what it was a good decade ago, that these regional integration bodies need to be pushing more strongly and pulling more strongly together to give a larger Pan-African view and present a picture that is more of a unified Africa. I think the strength, if they can do that, the strength of that is immense, and it takes some political will to do that. And I'm not sure we entirely have that political will, not least when, as we know, there are some issues in the northern African countries that are well publicized.
I mean, Bernie, sticking with the theme of regional integration, if you looked at what's happened in southern Africa, for instance, where there's a customs union and through it a revenue pool that is shared amongst the economies, some of the smaller countries are really struggling in the midst of a changing revenue sharing formula because of the economic crisis, where countries have not earned as much from international trade. And there are now calls, for instance, for bailouts of countries like Swaziland. Would your organization get involved in a situation like that, where because of the changing dynamics of global trade, smaller economies that are just not competitive internationally are given a bit of a leg up?
I should say I don't speak for ATI. I was its founding chief executive, and since I now work at Aspen Insurance. So in this context, I'm not really speaking for either. I'm giving my personal view. I mean, I think that it comes back to world trade. You know, it's 25% of global GDP is to do with world trade. That is clearly an important figure, and I think that is the route to go through which to level some of these issues. Trade support, wherever it comes from, on the whole, is economically a bad thing. And Africa, unfortunately, because it doesn't speak entirely with one voice, probably doesn't make its case as strongly as it could do in that.